Let me welcome on board Abhijit Roy, MD and CEO at Berger Paints as well, to talk about how their business has been, especially in the light of what's been happening with crude prices. Abhijit, good to have you on ET now once again. And, let's talk about crude first, because those prices have definitely been trending lower. It's down around, 15% from the September levels. How does that impact your business?
So yes, obviously there is a linkage with crude, though it's not very high, but it's still significant enough, and that will result in improvement in profitability. The bases are also on the higher side last year, so overall growth rate in profitability will be quite substantial in this quarter.
Uh, when you say that the impact is going to be difficult to gauge, what would be that threshold for you in terms of a global crude prices where you would be in a position to start bringing the prices down?
So, Nikunj, these prices have been fluctuating as you have been seeing, off and on. Sometimes it goes down to the 75, 80 level, then it bounces back again to 85, 90, and then there is a great talk that it is going to further increase. So it's not stable, unless it becomes, some sort of a stability is there in the prices. We have dropped the price, a little bit, about 1%. We have, cut the prices this quarter. But depends on how the raw material prices move along with the crude, because as I had always mentioned, there are few products which are directly linked to crude, and then there are many which aren't, like rutile is not linked directly to crude, or for that matter there are a lot of pigments which have got nothing to do with crude, or for that extenders which have nothing to do with crude. So all of these products are on its own. Thankfully, even the titanium dioxide prices have been stable at a lower level for quite some time now. So therefore, the margins are likely to be good for all companies. Definitely for us, and there will be therefore an increase in the profitability this quarter.
Abhijit, 6 months from, not 6 months from now, actually quarter from now, Grasim will make its entry. How will the dynamics change? I mean, are we looking at a war? Are we looking at innovation? Are we looking at new dealer margins? Where do you think things will change?
There's because this is a difficult call, unless they come in, and it's only a guesswork as of now. Lots of strategy A, B, C, D, happening, but we know more or less, there aren't too many areas of opportunity to surprise anyone. So it will be a mixture of everything, So probably the ad levels will go up a little bit, some amount of skirmish at the lower end of the spectrum. That is it. I don't think there is enough space in this industry, I think, for another player to come in. It's not going to be majorly disruptive as such. This is our feeling. And then this is why we are quite confident that, our growth rates that are there, we should be able to maintain near about that growth rate, going into the future as well.
Right. Abhijit, the other thing that I wanted to figure out, and we were just talking with an economist as well before we began our chat with you. Perhaps you would be better equipped to help us understand as to what's happening within the rural end of the market. Is that really seeing a demand uptick or a recovery?
Yeah, so surprisingly, it's the rural areas which are doing reasonably better. In October onwards, I saw a significant up move there in certain parts of the country. So it's slightly different from different parts of the country. The Diwali belt did very well in October, and November also it's okay. It's still holding on. It's the south, especially Kerala, and the east, which is not doing all that great. The bases are on the higher side in these cases as well. So the growth rate has been moderate here in these markets. So rural market, actually we cannot differentiate so much between the urban and the rural. For us, unlike FMCG, our rural is basically small towns, and they seem to be doing quite well.
Uh, are you surprised and also delighted that this year there was impact of inflation, unseasonal rainfall, Diwali and Dashera, they had different base in terms of month. Yet the industry has done rather well. I mean, the assumption at the beginning of the year would be that this would be a tough year for the paint industry. Rural demand is lower. Inflation and poor monsoon will eat into the disposable pie. But that fear has not translated into reality. Why is that?
So, it did impact a little bit, Nico. The second quarter was, muted, in terms of top line growth. You would have seen for the entire industry almost. The third quarter is relatively much better. Of course, we had a volume growth in the second quarter as well, which was in double digit, and that will continue possibly in the third quarter. In paint, we have seen that the repainting demand continues, and fortunately, even the new build sector, which was slowing down earlier, has also bounced back. So naturally, there is a demand which is there for the volume growth to be there, right through. This year, the volume value gap is reversed. So earlier last year, the volume growth was about 11-12%, but the value growth was coming at 23-24% because of the inflation and the price increases which we had taken. This year, the volume growth still remains at that 11-12% level, but the value growth is lower, because we have been passing on price decreases, in the market. So you have a situation where the volume value gap is on the other side. Which is why sometimes it looks like that there is a slower growth rate happening this year, but volume wise we are more or less on similar ground.
There is no value growth this year, given that raw material prices are coming under pressure. Then what happens to volume growth?
No, so volume growth is being maintained at what it was last year. It is in double digits. The value growth is lower than the volume growth. So, suppose it is 11-12% volume growth. In quarter two, it was much lower in terms of value growth. It's around 4-5% for us. But in the third quarter, because the mix will change, it will be in a superior mix. Probably the volume value gap will be much lower. So even if we do 11-12, probably it will be 9-10% or 8-10% value growth. That's how it is happening. Earlier last year, this same 11-12% volume growth was resulting in a 20-23% value.
Good to get in that clarity. Abhijit, great to have you on the show. Thanks as always for taking the time out.
Thank you.